Rob, the FT has this alarming headline that owning US tech stocks is no longer a route to quick returns. What's going on?
Well, we have had a bad week on the tech index in the S&P 500 for a lot of reasons, most notably Apple's disappointing results. But actually, the story of the larger sector is a little more complicated than that headline might suggest. So let's have a look at this chart.
So we seem to have two very different kind of groups here.
So this is 7 of the largest tech companies in the world, and you'll see they're bunched very differently.
Yeah.
Let's start on the bottom. So there we have not only Apple, but also Oracle, Qualcomm, IBM, and you might somewhat derisively call these old tech.
Yeah, I mean, my granddad will have heard of a few of these. And
Yeah.
they all seem to be associated with making big pieces of equipment.
Yeah.
So what's tech about that?
And they're not a very homogeneous group, but they do have certain financial characteristics in common. Namely, they're not growing very much.
Right.
They generate a lot of cash flow,
Yeah.
and they have low valuations.
Which sounds like a good combination if you want to own an income stock.
Yeah,
or something.
but the market is telling you we don't like our tech stocks to be value stocks. Right? So they're attractive in a certain way, but you can sit there owning Oracle, looking at its incredibly good margins and saying, when is the market going to love this? And the market is just not coming around.
The market doesn't like the idea it will be stable like this forever. Something will go wrong like Nokia or BlackBerry or something.
Precisely, precisely. So, but I would make another distinction again, that in that lower group, if there's one stock that doesn't belong, it's Apple. Because, as we were discussing before, Apple has 1 billion users. It has as many users as Facebook. It is between the phone 6 and the phone 7, meaning the low growth recently might be a temporary phenomenon. People are worried, but you could see Apple moving from that lower group to that upper group.
It's always had a foot in both camps. It's like an amazing manufacturer, but it also has control over your brain somehow, and that's where the profits. On the subject of which, the other ones that seem to control our brains, like Facebook and Alphabet or Google.
Yes.
I mean, what's the story there? Would you fancy buying either of those?
Well, funnily enough, and I've had a history, and the Lex column has had a history of being a little skeptical about some of the growthier tech stocks valuation and where they can grow into them. I'm starting to come around on some of these stocks. So if you look at the growth rate that Facebook is putting up, it almost justifies the high price of the stock. And what they're achieving in terms of growing their already huge user base, you just have to sort of stand back and be amazed. And it is clearly the destination for advertisers now. It's the main advertising destination.
It's the only place that
right
makes
now.
it work is the one that was already doing well.
So it's hard to think, gosh, Facebook looks overvalued, Google looks like a great stock. It's growing 15%. You can have it for 18 times earnings, and it owns this thing called the internet, which I think is going to be.
I've heard that might be the future. So great returns still to come. Thanks a lot, Rob.